Morning everybody, it's Chris here from Serene Education with the 4 majors analysis update for the 9th of August 2011. Just going to be looking at the 4 majors this morning, starting with the euro against the US dollar. Let's have a look at the daily. Well, you can see that we are in some sort of holding pattern, consolidation to the downside. We do have a slight support area roughly around the 1400 mark. Psychologically this is a support, and if I zoom out you can see where price has come from and where it's trading as we speak. The major trend in play as we speak. We've had a bounce and another bounce just recently to the upside. However, we had a bearish candle yesterday, followed by Asian markets upside movement this morning. Not a hell of a lot going on. However, if it continues this way, then it could be the start of a upside move. Notice the price is testing a prior support and resistance level, roughly the 1700. We've been there before. We saw a bit of a slowdown before we saw a break lower. However, consolidation. We are seeing a lot of indecision at the moment now. Well, yesterday the G7 and G20 countries sat down to try and come up with a plan to stem this negativity, this ripple that's been caused by the downgrade in the US market, as well as the possibility of Italy and Spain defaulting. So the Americans, the G20 countries having to come up and see how they can sort something out, as well as the G7 countries trying to work out a plan to try and see if they can bring in some sort of some plan to try and ease the burden that a lot of traders out there seem to think that we're going to see the likelihood of Italy and Spain defaulting on their debt, because it's just, you know, they're really in a rut at the moment. So what are they going to introduce? Could there be a chance of quantitative easing, the same type of thing that happened in the States? If that is the case, then we're going to have to see a huge push for that. Will it make any difference long term? It might get us out of a sticky point, but has it really helped the Americans at all? No. Burnt a lot of money and didn't really get out of it anyway. So seeing a bit of upside movement this morning, positiveness. If we see a bounce and price is still trading above this area going into the US session this afternoon, then we could very well see a bounce higher. So keep 1700 as a support area intraday. Break lower than that would definitely see the lower end, roughly 1410 or the 1400. 1400, apologies, and break below that, then we're looking at 1400 overall as our next potential target. We look at the 4-hour chart. You can see the very negative candle that we saw yesterday, a shooting star. This happened around as a resistance level. Price failed to materialize once breaking above the institutional moving average. We saw price revert to the downside after late afternoon trading, and then we saw consolidation in this range roughly around the 1700 mark, as I mentioned, and we've seen a bounce higher this morning. Ideally, we want to see price trading above these areas here to continue to the upside. Failure to do so, you can see that we could potentially see further downside movement quite shortly. Notice all the indecision, guys. Yesterday, very indecisive, primarily because of all the G7 and G20 countries sitting down and trying to thrash out deals after a very volatile end of the week last week, and an even volatile start this week. So yeah, we're going to see a lot more volatility as we head off into the end of this week, I presume, as we try to come up with some sort of plan to try and ease the burden felt not only in Europe but also stateside. So be very, very careful if you are trading these moves. You can see the volatility occurring. You don't want to be burnt, trust me. These moves are going to be quite sharp and they're very erratic, and in most cases it's going to be very difficult to make any clear profit. So please be very, very sure when trading that you have a definite entry level and your stop management is in place. Very important. Next up is sterling. Let's have a look at the daily. Here again, you can see this consolidation band here. Literally 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Almost 2 full weeks of going nowhere. Yes, you might be able to make profits intraday, but if you're trading long term, just sitting pretty. Looks like a big ball at the end of a stick. looks like a dog rot. Apologies, having fun. But you can see that there's a clear indication of consolidation here, which happens to be roughly around the previous consolidation range, and this is an all-time high that we were recently. You can see the higher swings. That's now been breached as we go into the early parts of the mid part of this week, and trading very indecisively. Clear indication of the market volatility out there as we go into this very negative period where we've seen this massive outpouring of negativity on the market relating to euro as well as the US dollar downgrade. So want a clear indication of price movement. Ideally, cable needs to be trading lower than 1625 in my eyes to look for any bearish downside. Notice CTC on a daily is still looking bullish, because as long as we're trading in this consolidation band and we're seeing higher swings, then there's a possibility of further upside movement. Notice that 16,2500 is the swing. Break below, then close lower, and that will now cancel that swing, and we should be looking for further opportunities to the downside. Daily long term, we've got 1500 as the next potential target if a break of 1625 is met, or overall we can look at 1600. Why? Because 1600 long term has been a very strong support and resistance level in the past. Notice a lot of consolidation around this black horizontal line here, which happens to be the 1600. You can see where sterling has come from. If I just draw that, you can see just at the right end of the chart, we have a break recently, but we saw a rally, and now we're having a consolidation around this major trend on the underside of the trend. Got to see a break higher than that. Once we break higher than that, then we're going to see clearer air, which will look at roughly the 16,700 mark as our overall target. But you can see that ideally we want to be trading well above the 16,450 mark, because then we're going to see a lot more cleaner air between this area here and the previous high. So again, yesterday's trading saw some upside movement. However, price reverted to the downside during the latter part of last night, and then we saw going into the Asian session trading slightly lower. However, we are in a consolidation band now going into the European Open. Ideally want to see a break lower than 16,2500 and a close lower to confirm that we're still likely to see further negativity, or need a break above 16,4500 to give us a clear indication that we're going to see further upside movement long term without all this consolidation. So you can either wait. You can either say, well, I'll give back this to the market and then trade the outcome, whether bearish or bullish. It's entirely your choice. Just make sure that you have your money management rules in play and everything on the CTC adds up on your shorter time frames to take those entries. US dollar Swiss franc, very interesting this one. You'll notice that we've been in a very bear market, and just recently a lot more selling. You can see the actual speed dictated by the drop. You can see if you look at it just on this right hard edge here, how the swings have been a lot more sharper to the downside, and so pushing price lower, 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 swing lower, swing lower, swing lower. So it's a very, very strong drop as we see the US dollar being downgraded. Everybody's just been running to a currency, a safe haven currency as you might call it, which happens to be the US dollar Swiss franc in this case. Commodity prices as well, you've seen everybody purchasing those, but you can see the huge drop, and word in everybody's mouth is that the Swiss franc is overbought, and there's talk that we might see the Swiss franc or the Swiss government actually intervening, i.e. either with QE steps, which just happens to be on everybody's word at the moment now. It's definitely an indication that we might see it throughout the Eurozone states. So we could see quantitative easing or intervention, either one, which could see a rise very soon. All we're saying is, yes, the US dollar is still tanking. Yes, the US dollar is still looking very negative. However, Swiss franc, the government doesn't want a very strong Swiss franc for obvious reasons, and they might very well start to intervene. So heads up, that could happen anytime, anywhere. That's entirely down to the Swiss government, but you don't want to be looking at possible shorts when the price actually moves higher and stops you out very quickly. So tentatively, you could bide your time. I mean, later this afternoon we have very important figures coming out. US side, we have non-farm production quarter-on-quarter figures. They're expecting a very negative forecast. So if that figure happens to come out slightly higher, then we might see a slight bullishness for the US dollar. If it comes out lower, then expect further downside movement. We've also got prelim unit LIBOR costs. And then we have the FOMC statement and the federal funds rate. The federal fund rate is still at 0.25%. Are we going to see an increase? Are we going to stay the same? What will it do to the market if it stays the same? What does the federal fund rate do in correlation to the whole bigger picture? This is the thing. It's standing. It has been at 0.25 for a while. They're still forecasting no change at 0.25. Will the Fed change that? That remains to be seen. So a lot of news out today on the US dollar this afternoon. So that could all affect price action this afternoon. So be very, very, very attentive when trading the US dollar and the Japanese yen pairs in particular. Last pair of the day is the US dollar Japanese yen. Look at the daily time frame. You can see this monetary easing policy that came out. We saw this massive move to the upside, literally testing the 80 mark, which happened to be the price support, long-term support on this particular pair. Over a long period of time, you can see the more pan out, each one of these candles representing a day. You can see the price action has been consolidating in this downtrend for some time. The highs have been swinging lower, but we haven't seen a breach of 80 except for the intervention earlier this year on the March by the G7. Then we saw a break to the downside. The US dollar really losing ground against the yen. And then we saw a slight pause at a previous low, 77. And we saw a bounce. And then the Japanese government intervened and we saw monetary easing policies being put in place, which saw price really rally, huge rally during that daily, testing the prior resistance, however falling back and reverting back to the downside as it did prior, because the US dollar has not, there's nothing in there for long-term traders or the commercial traders to even looking at further bullishness, because it just doesn't stack up, as we've seen price revert to the downside as we thought it would. So as mentioned, today's figures that come out this afternoon at 1:30 p.m. GMT right through to 7 this evening GMT are going to be very important to see what happens to the US dollar. Further negativity on those figures would see price action retest the prior lows we saw here at the 76.50 mark, and a close lower would definitely sound further alarm bells for further progression downside. So heads up, be aware of it. Intraday, we're still looking bearish for this pair with at least the 76.80 mark, ideally the 76.50 long term as potential targets. If we see a bounce, if we see price action trading at the higher end of the wick going into the US session, we could possibly see a consolidation pullback of some sort. And if we see a higher swing posted here, then obviously what we're looking at potentially is a correction. You can see here, if I just take that swing and that one, the low, that's higher. We are testing that range now. Are we going to see consolidation at this area here on a daily to see a possible bounce higher? That will come as long as price is trading at the high end of this wick. Then it could be telling us that there's further buying, there's more buyers than sellers, and we could see obviously a price reaction upside move. But that will all focus on the news events later this afternoon. Please stay away. If you're not in trades, please trade very tentatively on the US dollar Swiss franc today, as well as the US dollar Japanese yen, because those two reflect very closely to the US dollar price move, and we don't want to see volatility prior to any news announcements. So keep that in mind. Make sure if you are using the CTC that you are following the rules of the actual template, and you're backing up with very strong money management. We are seeing a lot of volatility in the market, and with that volatility comes very erratic money management guidelines, you're going to find that there's whipping a lot, there's a lot of irregular movement, and you have to factor that into your trading. If it is far too volatile, then it's pointless trading it, because the likelihood of you being stopped out and you actually trading with an adverse risk reward are going to be far greater, and it's just not what we want to do as traders. So keep that in mind. Most importantly, keep your trading simple, trade with the right money management rules, follow the templates, and most importantly, trade serenely.